Kit, when you look at some of the pairings, I don't know whether you like euro dollar maybe more than others, but does everything point to dollar dynamics and a weaker dollar from here?
Yeah, in general, yes. I mean, I think one of the features of markets that seems to me is that they move in regimes changes more than anything else. And I think that the question people have to ask themselves at the end of this year is, does the collapse of real yields, real rates in the United States, reversing most of the gap that had opened up with the rest of the world, represent a lasting regime change? And I would say yes, because Jay Powell's told us that the Fed is staying down here for a long time. And it's not surprising to me that the FX winners from that are currencies like the yen, the current account surplus economies that have to export capital to the rest of the world because they have surpluses and are being less encouraged to do so if other people don't have higher rates than them. That seems to make sense. And I would say that although being bearish of the dollar is consensual at the end of this year, the only thing that'll really explode that consensus is if Jay Powell turns up and says, well, when I said we were going to let the economy run hot and inflation overshoot, I hadn't realized there was a vaccine coming, and we're going to think about normalizing monetary policy. Right. That isn't going to happen next year. I mean, that really isn't going to happen next year. And on that basis, I think we've got a weaker dollar ahead.